Welcome to Friday's Market Wrap-Up here at T3 Live. Matthew Buckley, the Chief Options Strategist. And today, good news is good news. Or actually, great news is great news, I would guess. But we'll dig into it. The non-farm payroll, 248,000. And that just absolute embarrassment. Last time, the 142,000 was actually revised up. We all kind of expected it to be revised up, but it was still shy of the 200K mark. 180,000 revised up, but 248K is well north of 216 that they were forecasting. The big headline, though, to me is the unemployment rate, 5.9%, and we'll explain why here in a second, but this is also kind of eye-catching here. 0.0%, Mr. Blutarski's GPA at Faber University. Average hourly earnings absolutely flat. We're going to get final services PMI here in a couple minutes as I'm shooting this video. But the ISM non-manufacturing PMI is also going to be a potential market-moving number here, because we saw earlier in the week the manufacturing PMI rolled over, and we briefed that right here. ISM non-manufacturing PMI on Wednesday was a 56.6, so that was a big miss. So let's dig into this here. 5.9%. Right? Yay. Wow, that's incredible. Our unemployment rate's under 6%. It's horrible news, folks. That's because we're at a 3-decade low, 62.8 to 62.7. That's the labor force participation rate. That's the lowest in over 36 years. 1978, folks. I wonder who was in office around that time, okay? So people not in the labor force rose to a new record high to 92.6 million, folks. I mean, from college students living on their parents' couches, recent graduates who can't find work, to, folks who are a little older in age not being able to find a job after being laid off. I mean, this is just bad. This is not a good thing that we are at 5.9%. I mean, that chart's worth 1,000 words. 1978, folks. Parabolic non-recovery. Wages. Okay. The bad news is that stagnant. Okay. The average hourly earnings rate for all private industries, $24.53. This was only one of 6 months since the failure of Lehman Brothers, when there was a sequential decline in average hourly earnings. Okay, that's not good. So the trend is not our friend with average hourly earnings. So take a look at this, and again, a picture's worth 1,000 words. So know that of course the market's having a rip your face off rally. I think part of this is a little bit of a relief rally, to be brutally honest with you. And I'll take it. Our weekly options trades and our weekly options model portfolio are absolutely crushing it. Our Goog and Twitter, we have a Google Iron Condor and a Twitter Bull Put spread, and both of them are going to look like they're going to expire here for max profit of about $5,200. $5,200 on 10K in risk this week. That's that's pretty awesome performance. We also have a bearish double vertical out to October expiration on the VIX. And as vol implodes here, this trade's going to start making some nice money as well. So really pleased with what's going on in the weekly options model portfolio. Hopefully you got a chance to sign up for our test flight by going to t3live.com/ I believe it's test flight. Yeah, t3live.com/test-flight, and you can get airborne into a 2-week trial for only $38. Not even the price of a average bottle of wine there. For 2 weeks, you can trade live with me in our weekly options live trade brief, our primary live trade brief, and also get access to a couple of our workbooks. That alone, folks, are $195 total, and you can get those for $38. Okay. All right, folks, I got to run. Have a great Friday. Happy hunting. Make sure you hedge and expect more of this volatility to come. This isn't the all clear siren sounded today. This is the volatility's staying here siren that I think just sounded. Okay, so have a great weekend, and I'll be back with Monday's market outlook from San Diego. We'll see you.